Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. It was yet another quiet day here on the floor as the S&P sits just about unchanged. Over the last month, we've seen less than a 10 realized volatility on the S&P 500. Now the VIX still at just about 17, so it's still pricing in that the future will be more volatile than this last month. But is that just a premium people are paying on the off chance of a 30, 40, 50 VIX level in the event of a crash, when in reality they're expecting lower volatility? Or is that people really expecting we're going to move back up into the S&P moving 1% a day rather than the about 0.5% a day we've been seeing? There's one trade I wanted to highlight today, and it was in April. It was people playing that skew risk, the possibility of a major pop versus the possibility that the VIX is going to drift down to where the realized has been at 10 to 15. The customer made a bet that the VIX is going to move downward. What they did was they bought the May 18 27.5 risk reversal. Now the VIX cash is at 17, but the April VIX future is at 20. So the April 18 put isn't worth as much more than the 27.5 call that you'd expect. So they paid 30 cents for the spread. So they bought that 18 put, sold the 27.5 call, paid 30 cents. Now the VIX does drift down and the April future follows it. This will start gaining value below 18. Your break even is 17.70 on the trade, and they'd make money anywhere below there. If the April settled 16, for example, it's worth $1.70. If it settles 15, it's $2.70. On the upside, however, you give up that upside call. So if the VIX breaks through 27.5, you start losing. And there's a lot of liability if the VIX has a crash. If it goes to 50, for example, you're down $22. If it goes to 40, you're down 12. So that's a bet the customer was making, willing to give up that upside because it's trading at such high premium levels in exchange for the downside, which is always traded at a lower volatility in implied terms. So they bought the 18 27.5 risk reversal 3,000 times, paid 30 cents for it. That's what we've had going so far. It's been a pretty quiet day. This is Jamie Tyrrell with Group 1 Option Monster.